Hello, everybody. Welcome to my managerial accounting videos. These are dealing with cost, volume, profit, and here are some additional questions relating to what we call composite units, or when we're selling more than one product at a time. So let's get right over to it. This presentation is copyright 2024 by Bennett Tchaikovsky. All rights are reserved. This may not be distributed or redistributed without my express permission. So, any opinions expressed in this presentation are those of myself and not my employers or any other organizations, including but not limited to Irvine Valley College in the South Orange County Community College District. No accountants were harmed in the making of this video. All right, let's go ahead and take a look at this one over here. So we have over here, and let me just get this cleaned up just a bit. So when we come over here to composite units, it's essentially we're basically selling many different units, but we're not selling them in the same ratio. Where in this case over here, Kira's coloring markers sells 4 types of markers: Scarlet, Cyan, Goldenrod, and Lime. For the 2026 sales year, they project the following. So they project that they're going to sell Scarlet markers at 200 per unit. It's going to have a variable cost of 100 per unit: Cyan, Goldenrod, and Lime. And they're selling these products in the ratio for every 10 of Scarlet they're selling 9 of Cyan, 7 of Goldenrod, and then 5 of Lime. So what we have to do in this particular question is we're basically now saying, okay, we're not selling just one unit, that what we were kind of going over here and doing. We're now selling a variety of different units. So the way we're going to do this is our first step is going to be is we're going to figure out is what is the per unit contribution margin. Okay, so that's the first thing we need to go through and do, because when we're going through and looking at this, and this is the one you're going to want to actually use the ratios. When I have a break-even point in composite units, right, as I'm coming over here, right? So looking at this, what I'm trying to basically go through and figure out is the break-even point in composite units. It's going to be my fixed costs divided by the contribution margin per composite unit. So that's what we're trying to figure out. So first, what we need to go through and do, though, is to figure out the individual contribution margins for each of these products. So for Scarlet, it's going to be the sales price per unit minus my variable cost per unit, or 200 minus 100 gives me 100. 160 minus 80 gives me 80. 100 minus 40 for Goldenrod gives me 60. And then Lime is 400 minus 250, or 150. Now, at this point, and CM stands for contribution margin. At this point, this is what each individual product is, their contribution margin. However, when it comes to these particular to these products, they're not being sold in the same order. It's not 1 to 1 to 1. It's 10 to 9 to 7 to 5. So what I'm going to need to do is I'm going to need to take the ratio. For every 10 of Scarlet I'm selling 9 of Cyan, 7 of Goldenrod, and 5 of Lime. What I'm then going to do to come up with my contribution margin per composite unit, what I'm going to need to go through and do is take the per unit contribution margin of each of these and multiply it by the ratio. So this is going to be my total is contribution margin per composite unit. So over here, I take 1,000 times 10, or 1,000, 80 times 9, or 720, 60 times 7, or 420, 150 times 5, or 750. The total of these 4 items gives me 2,890, which is what we call my contribution margin per composite unit. Very important concept. So coming over here, My total contribution margin per composite unit is $2,890. So to figure out the break-even point in composite units, I need to take my fixed costs, which are 260,100, and I need to divide this by 2,890. So coming over here, my break-even point in composite units is going to be 90. So this is my break-even point. I'm taking my fixed costs, or 260,100, dividing this by my contribution margin per composite unit. So my break-even in composite units is going to be 90. Okay. So now these are composite units that are being sold. So my break-even point in composite units is 90. Now, I'm also being asked here, what are my total sales dollars to achieve break even? So I need my total sales dollars to achieve break even, and then how many units of cyan are sold at break even? Well, to go through and to figure out this part over here, when I see this break even point in composite units, for example, over here, I've got scarlet, cyan, goldenrod, and lime. My composite units is going to be 90. We'll call this my break-even point in composite units. So this is going to be at 90 for each of these because that was the result we got here. What I'm now going to do is I'm going to multiply this by the ratio. My ratio, or this up here, is now 10,975. So the units to be sold to reach break even is going to be 900 for scarlet, 810 for cyan, 630 for goldenrod, and then 450 for lime. So at break even, which means a zero profit, this is what I'm going to have. These are how many units of each I'm going to have to go through and sell. Coming over here, so how many units of cyan are sold at break even? Well, we're going to say over here, my number of units at cyan are going to be at 810. But how do we know that these numbers are correct? Let's take a look. If we look at our old formula, we're going to have our sales, variable costs is going to give us our contribution margin, and then less our fixed costs is going to give us our net income. And we know that our net income is basically going to be zero. So if our fixed costs were 260,100, it means that my contribution margin must have been 260,100. So when I'm looking at this question over here, like, okay, what's break even when we're dealing with composite units? This is what we're going through and taking a look at. So how do I know if this is right? Well, there's a couple different things I can go through and do, but let's go ahead and do one of the easier ones first. So if we kind of set over here, like let's take a look at our sales. So we had scarlet, cyan, goldenrod, and lime. And the units that I'm selling at break even for scarlet are going to be 900. Cyan will be 810. Goldenrod will be 630, and lime will be 450. And as I come over here, my per unit, right? So in terms of my per unit, my sales price per unit is going to be, for scarlet, it's going to be 200. For cyan, it is going to be 160. For goldenrod, it is going to be 100. And for lime, it is going to be 400. So if I go through and multiply these through, what I'm going to get are my total of 552,600 of total sales. Now, how do we know if this total sales amount that I just computed over here is correct, meaning my total sales dollars to achieve break even? Well, coming over here, I have my sales minus my variable costs for scarlet, cyan, goldenrod, and lime. If I sold 900 units of scarlet, I must have had 900 units sold of variable costs. If I sold 810 units of cyan, I must have had variable costs of 810, 630, and 450. My per unit over here for my variable cost for scarlet was 100. For cyan, it was 80. For goldenrod, it was 60. And for lime, it was 150. So coming over here, if I go through and do the same thing where I'm adding these amounts up, I get basically 260,000, which actually doesn't seem correct. What am I doing wrong? Oh, I multiplied it by the contribution margin instead of variable cost. So let's go over here. Scarlet, my variable cost was 100. Cyan was 80, goldenrod was 40, and lime was 250. So again, when you're looking at this, pretty easy to go through and make mistakes, just like yours truly just did. When I come over here now, right, I'm basically now saying, well, my sales less my variable costs are giving me my contribution margin over here of 260,100. So I know that these numbers are in fact correct. If I was looking for a faster way to go through and to determine if what I have done is accurate, the other thing I could have just done is focused on the contribution margin. And that would essentially be saying, okay, you've got scarlet, cyan, goldenrod, and lime. The units that I'm selling to achieve the break even are 900, 810, 630, and 450. My contribution margin per unit is going to be over here at 100, 80, 60, and 150. If I multiply these across and I add these up, I'm going to get 260,100. So again, I can just, instead of, depending on the question, if I'm just trying to go through and check my work, I can focus on the contribution margin, then less the fixed costs. My net income is going to be 0. So what I'm going to do is I'm going to call this part 1 of this particular question. I'm going to come back and do part 2 momentarily. What we're going to go through and do is it's the same question, except that there's a tax rate of 30% and an after-tax profit is 455, 175 is desired. So what we're going to do is I'm going to come back. We're going to go through and then finish up this question. And then I will look forward to seeing you on the next video. So that ends this composite unit part 1. And I will see you on the next video. Have a great day.